Welcome out to the halftime report presented by Tackle Trading. If you're new to Tackle Trading, go ahead and hit that subscribe button because we got a lot of great goodies from an educational and a trading perspective on the Tackle Trading YouTube channel. And if you want to check out what the Tackle Trading Pro member community is all about, hit us up at team@tackletrading.com. You can also always go to the tackletrading.com website, hit the storefront, and always sign up for a trial there or check out any of our amazing trading systems or educational content out there as well. For today, Friday, I got the amazing Coach Frank here today. Coach Frank, how you doing?
Doing well. Excited to be here. I was excited doing my morning scanning. Found lots of interesting things. I can't wait to talk charting and daily routine with the team. Excited to be here on a Friday.
You know, Frank, yeah, I woke up today and it's Friday it's Friday fun day with Frank, right?
Oh yeah.
And I just had this a song in my head all day long, just charts. That's all we do on a Friday. Like honestly, Frankie, how many charts do you look at every Friday?
A
It's
lot.
thousands. It's
It's
thousands.
it's over 1,000.
Yeah,
Yeah.
it's thousands.
It's
It's
my own
fun.
personal scanning is right just north of 1,000. That just fits
hmm
into my personal screener. And that doesn't count, things that get into yours or Mark's or Greg's or
hmm
Ty's or whoever. So it's a lot. It's fun. I love looking at charts. I never
I
get tired of
love
looking at
looking at
charts.
charts. Oh, those the scanning goes by really fast too because you just look for pictures, right? You've kind of memorized those patterns in the back of your head. You've seen them a million times, and so you're really identifying just pattern recognition. So I really enjoy it, and I really enjoy Fridays with Frank, given the fact that both of us just love technical analysis probably more than any other form of analysis out there. There's no doubt about that. So let's get into your technical read on the market here, Frankie. This market does not even seem like it wants to hesitate enough for the 9 EMA to catch up to it. That's how much momentum's in the market. What's your read here?
Bullish, and more bullish. A couple of weeks ago, Swin and I were talking in the chat about how many all-time highs do we see before the end of the year.
I think I made a joke. It's about 25.
Yeah, I
Yeah.
went 15. I think Swin went 3. It was over quick for Swin. On a positive
Yeah,
note, it
that
didn't
was
drag it
three
out or
days in.
anything. I mean, listen, this is pure momentum, right? All-time highs, everything's rising. I mean, the challenge in this environment is going to be the picking side, the
Yeah.
precision side, right? It's not the directional side. I mean, how do you not like this from a bullish point of view? I mean, there's really nothing bad to say. I mean, you can make a case that it's overextended, but I don't really generally live by that case too much personally.
hmm Well, can I jump on that one real quick? Because
Sure.
when you are looking at the marketplace in general, right? I do think it's very rational to come to the conclusion that the market is overextended in the short term.
Sure.
RSI is at 92. We haven't had any hesitation. We haven't even had a high base yet, Frankie.
No,
And
no.
I'm serious. How many bars are we into this? We're damn near a month into this. We haven't had a high base. We haven't had a flag base pattern. We've had just this methodical grind. And so when you're looking at the market, sometimes I think it can give a little bit of a misread with what is actually transpiring within the sectors, for example.
Mhm.
And so let me just give you an example. And we'll talk about some sectors here later on today as we normally do on a Friday. But Frankie, when we were going through the cyclical areas of the market, industrials, finance, basic materials, when you're looking at those areas of the market, last week you had an environment where energy was at 25. You had an environment where materials was at 30, industrials at 30, and finance was the leader of that space coming in at 15. Well, this week you're most likely going to see a little bit of changes happening with the cyclical rankings, whereas they're all going to be somewhere in that 25 to 35 type ballpark. And when you're looking at those just from a pure numbers perspective, you're thinking the market is just one and the same. They're all doing the same thing. Well, they're not. Energy and finance over after very, very good runs over the course of the last couple months. You see that run there in finance, and everybody and their dog knows exactly that run I'm talking about in the energy space. Those were really, really hot. Both sectors were in that 20 to 15 type of area. Well, what have we been seeing over the last couple weeks? Over the last couple weeks, despite the market doing nothing but just up, 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 and I think we've dinged, I think, 7 all-time highs in that time frame. Well, in that environment, you're really starting to see a little bit of slowing momentum in energy. You're seeing a little bit of slowing momentum in finance. These runs that have been so good in over the last month and a half, the last 2 weeks, they've been seeing a lot of consolidation here. You're seeing a little bit of slowing momentum. And because of that slowing momentum, you are undoubtedly going to see downgrades of tackle trading, because we take momentum into account when we do our sector rankings. Well, once again, when you see, okay, well, does that mean everything is kind of turning over in cyclical? That's not what it means. Whereas somebody's loss here, and I don't even want to say it's a loss given the fact that we're just seeing simple consolidation. Well, when you look at industrials here, industrials is staring down the barrel of a nice little upgrade given the fact that you pivoted here on a support pivot. You then drilled that resistance level, gapped up over the resistance channel, and you see that on a weekly chart, Frankie. And that, I mean, the close is going to be important here, and that goes without saying, but that looks like a breakout on multiple time frames to me. And so whereas finance and energy are seeing a little bit of short-term slowing momentum, and those rankings at tackle will reflect that, you got to think about where these sectors come from as well. And I'm starting to see a little bit of pickup in industrials. I'm seeing a little bit of pickup in the other areas of the cyclical areas outside of industrials, and that would be the basic material space. You're seeing that. You're seeing a little bit of breakout here in materials, double bottom, right shoulder breakout here this week. Looking at the daily chart, you're really starting to see the continuation of momentum and not the slowing of momentum. And so when you're looking at the marketplace and you're looking at the S&P, yeah, I think it is reasonable to come away saying after a 4-week stretch where the market hasn't had a high base, in a 4-week stretch where the market has not had a flag, in a 4-week stretch where the market seemingly has done nothing besides bull, 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 that doesn't tell the story of the marketplace. That tells the story of just the index level. There's always happenings happening underneath the market, and those sectors have been telling the story. Post-pandemic, those sectors have told the story. They continue to tell the story. And so definitely check out the Tackle Train newsletter tomorrow as we do all those rankings. But I just wanted to bring that up, Frankie, because simply because the market is overextended doesn't mean there's not areas in the market that are ripe for buying interest.
Exactly. I think that's a great point. I mean, sometimes the S&P is what gets the headlines, and fair enough, right? But it does not tell the whole story. It almost never does, right? Once in a while it does, but
well, and honestly, I like, for example, I'll give you an example of this, Frankie. Even for and why I love top-down analysis so much, right? You get your reading of the market, you identify the sectors, industries will stand out, and then when you look at the stocks, you really do tell this story. And when you're looking at communications, for example, here, if all you do is look at the sector itself, Frankie, you're looking at a potential reversal and you're looking at a potential breakout, correct?
Yep.
That's an upgrade. At least for me, that's a technical upgrade there. You've held support, you're blasting off, you're reclaiming the 50-day moving average, you're breaking back up above 82. That's a breakout. And yet, Frankie, I found more potential shorts in comms than I found in any other sector. I found more potential shorts in comms than I found anything that looked reasonable from the buying perspective. And so even though the sector is solidifying itself a little bit, I think we need a little bit more time with what is happening underneath the sector, because you got some leadership happening out of Google. That's obviously picking up a little bit, but you got some reversal analysis. It still has to work itself out through. Let's come back, and again, don't want to belabor that. We'll talk a little bit about sectors here in a moment. You know, Frankie, from an index perspective, S&P just seemingly just up, 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 up. NASDAQ obviously doing its best momentum trend, not only catching up to the previous momentum of the S&P, but now just clearly just going gangbusters here. Frankie, what's your read on the NASDAQ? Any discernible difference from the S&P right now?
No, I mean, it's lovely to see the semis run, right? I mean, our old friend AMAT, I mean, boy, they're not
that
alone,
weekly
but
breakout,
that
brother.
weekly breakout, I mean, just
Cute.
I really like when the semis are playing ball, right? That I think that's my favorite market, is the market when semiconductors are hot, which luckily you get that market a lot, right? I think that's my favorite time to trade. And, so, NASDAQ, you're talking discretionary. I mean,
Hmm.
that thing has just been a beast, right? Semis, tech around the board, absolutely strong. Can you make a great case that it's that much stronger discernibly from the broad market? No, I like it more. I think, I've got it rated higher for whatever that might be worth, but it really is about the same technical read, I'd argue.
Well, and honestly, Frankie, a lot of this momentum has been doing without the biggest component of that sector, and that is Apple Computer here, Frankie. Apple's an interesting stock to me, given the fact that it hasn't really it's participated in the recovery, but it has not led the recovery here.
Right.
It's underperforming almost everything else that has shown any degree of momentum. But Apple can be one of those stocks that catches up very quickly here, Frankie. Do you have any read on a potential breakout on Apple above 153?
You know, when you brought this up earlier, at first I was like, I have
I'm
other
going to keep
stocks I
bringing it
like.
up until I get the answer I want, Frank.
Exactly. Well,
Yeah.
when you first brought it up, I was thinking, I just got other things I like more,
Yeah.
right? But now that, but I got thinking about it and I was looking at it, I don't really mind a scaling in philosophy here where maybe we do work with partial position on this initial break of, we'll call it 153, that high point on the 28th, that earnings pop, I believe, and then adding two on the break. Because just like Microsoft and those names, when they break out, you at least want to consider participating, right? They just have a great
Well,
track record of breaking out and moving. So you want it on the
yes.
radar. So I think the way it's shaped up throughout the course of this week has created an opportunity where I think we would call that a breakout. I mean, obviously we still have to navigate that all-time high. That's not that far away. I think I would be most personally interested in a little bit of a scale in with that, add on the ultimate breakout type of
Yeah.
philosophy on this chart. But
So,
yeah, I think you could.
all right, so scale in above 153, play it to 157, and if it breaks out at 157, you basically say, go catch up to Microsoft's breakout against that all-time
Exactly.
high, right?
Exactly.
That scenario. Gotcha. Let's talk a little bit about the Russell 2000 here, Frankie. The Russell
gracious.
2000 has, I just gave you the scenario on applied materials. We love that breakout on applied materials. Well, if I show you the chart of AMAT here, look at the neutrality, look at the breakout,
Yeah.
check out that weekly chart, look at that tight consolidation, clean channel, breakout. Now let's take it to the Russell 2000 here, Frankie. Little bit of a similar type read, little consolidation, building into the breakout channel. I won't say it's a no sell candle, but you got to like that breakout there, Frankie. What is your read on the Russell 2000? Are you excited about it? Have you been waiting for it? How are you approaching the breakout here?
I'm very excited about it. Are you kidding me? Because it doesn't matter if it's the Rut or AMAT or whoever it might be.
I mean, you're breakout Frank.
I'm breakout Frank for a reason, right? And when you break out of these long-term consolidation ranges, that can lead to great growth. And then when you talk specifically about the Rut, we've all seen it, right? Rut is fairly predictable in the sense of it pops and then it consolidates and then it pops and consolidates, right? It might not always be the easiest read, but that's what it tends to do as an index. This is going to be a great confirmation candle on that weekly chart. I expect the Rut into 26, to be quite honest with you. That's where I would target this chart. And I have no reason not to continue to stick with that as it looks right now. So this is a great place to be from a trading point of view. Great momentum base. Any consolidations, flags, IWM will absolutely be a tradable instrument for me.
100%. I'm right there with you as well, Frankie. I like the momentum that is occurring over the course of the last 5 trading days, but I like the analysis going into it. I called the Russell literally last week and the week before. I called it the best opportunity the Russell has had to break out of this range based on the technical conditions. And then when you line that up coming into some seasonality, which, a tackle, I'd like to say seasonality, we see it as an indicator. We don't see it as gospel, but we see it as an indicator, right? That there are certain time periods throughout the year that have a tendency to attract certain behavioral analysis from market participants, but that every single year has different variables that you have to take into account. And so I think that's how we do approach seasonality. But then you start talking about coming through earnings season in October. It's been a positive catalyst for a lot of this momentum that has been playing out over the last 3 weeks. You look at the Russell 2000 this week, breaking out on some positive catalysts. You talk about today, labor market numbers, and I'll get into the labor market numbers in a little bit, but the labor market numbers today were extremely impressive, and not just the headline number, Frankie,
Yeah.
but the revisions. And this is something I talked about last month with the labor market numbers when they had a miss. I said, guys, give it a month. You got to give these labor market numbers a month, because what we've been seeing over the last 6 months are pretty decent revisions upward as they start understanding the data. We saw that again, and I'll go through all of those numbers. And the reason I bring these things up is you got a positive tailwind called seasonality. You have positive things happening from an economic perspective. A couple weeks ago, you had the Merck news with the oral pill that individuals could take to reduce hospitalizations and death counts from a COVID perspective. Well, today Pfizer makes very, very similar news coming out today. And so you got a lot of positive tailwinds, and I haven't even talked about infrastructure or whatever the government is going to do, because I'm kind of sick of talking about infrastructure and whatever the government is going to do. But at the end of the day, positive tailwind from a seasonality perspective, positive breakout with momentum from a technical condition, and then you look at a little bit of an improving fundamental backdrop from an earnings perspective as well as an economic perspective. You never want to call your shot as traders. You want to always adapt to price action. But this thing looks legit, and so far so good here, Frankie. A little bit overextended following a breakout, but I also want to say volume has supported the breakout as well.
For sure.
You've seen a little bit of increase in volume. You got to think the Russell 2000 certainly has a little bit of leg up here, and I'd like to see a trend start developing here. Right now, we just got the breakout. I'm waiting for that secondary pattern here,
Secondary
Frankie.
pattern to give.
I'm
Yeah,
waiting for that.
that should be an interesting one, because not everybody got in on the breakout, right? So giving
No,
them
I
a
think a
chance
lot
and
of
see how
people
they
missed.
respond, and
Well,
it'd be fair enough, right? You can't catch them all.
the simple reality is the Russell 2000 has done nothing for 10 consecutive months.
Yeah.
I'm willing to bet a tremendous amount of people missed out on an index that has fooled me once, twice, thrice, 4 times, 5 times. How many times have we tested the 2300 to 2350 over the
Yeah.
last 10 months? But that's the thing in trading. A lot of times when something breaks out, not everybody catches it. It's the traders, it's the hardcore traders that are here every day, that do their job as traders every single day. But there is a tremendous amount of market participants out there that never catch the first wave, that
Yep.
always wake up to that second wave. And that's why, if you understand Elliott wave theory and Fibonacci, and I'm glad Tim's not here today, that's why wave 3 is the longest of the wave counts. We are in wave 1 of the Russell 2000 breakout. Stay with us next week, the week after, as we navigate this breakout and the eventual. It's got to retrace at some point, right? It's got to flag at some point, right, Frankie?
The pattern will develop, and just
should
know
I show
what
you
you
the
want.
S&P again?
Well, okay, it probably will develop. You'll
Okay.
probably get an opportunity.
All right,
to
Frankie,
look
let's
in.
move on from the indexes. Let's talk a little bit about some macro news that did come out here today. And just wanted to kind of rapid fire a little bit about this. First and foremost, let's cover the labor market numbers here today, Frankie. And I will bring up Forex Factory. For those of you who wonder where I get a lot of the economic data, I like Forex Factory here, and you can kind of scroll down. See this little filter button over there? You can check out whatever currencies, economic reports you want to check out there. We want to look at the US dollar here, because that is the labor market numbers here today. And Frankie, whoa, what a labor market day it was, if you want to believe the headline number. I don't put a lot of credibility into a lot of the labor market numbers when they come out on that day.
Mhm.
I will say what I said last month and the month before that. And don't get me wrong, it's a great number. It came in at 531. The revisions were strong, but these numbers have not been near accurate when you look at 30 days later. For example, let me give you an example, Frankie. In September, it was 194,000, and everybody was saying it was the worst report they've seen, and the end of the world was happening, and the entire economy is going to shut down. That was revised upwards to 312,000. We're talking EIA numbers being accurate here in the labor market, because it's just and again, I said it last month, I'll say it again. I couldn't imagine the difficulty in accurately assessing the labor market post-pandemic.
Oh yeah, I'm sure it's very difficult.
It's very
I
difficult,
wouldn't want that job.
and so I think we can understand the inaccurate data. But if we all understand the inaccurate data, let's just not all go radical when the headline number comes out.
Right.
That's all I'm saying. Let's give it a little bit of time to see where the real issues are. Well, right here, from in September of this month, we improved from about 100 and what would that be? About 117,000 jobs. August went from 366,000 to 483,000 jobs. And so over the last 2 months, you've actually seen a revision of 235,000 jobs, Frankie. 235,000 jobs revision to the upside. The headline number coming out today is very impressive, though. It came out with 531,000. The expectation was 455,000. That is a very good headline number. Revisions have been upward in the past. This is a really good number. I want to see that revision coming in 30 days from now, but you do got to see this as a positive thing moving forward in the market as the economy certainly as the economy certainly does go, as the labor market goes as well. As that improves, maybe the Russell 2000 improves with it as well. I'm kind of geeking out on that Russell 2000 here. The actual labor market numbers did contract here. It was 4.8% last month. Headline number comes in at 4.6, which is a very good number there as well. Don't want to belabor a lot of the labor market numbers here today, but we do have a positive catalyst coming out of there. Also, one additional thing to go in line with that, as I discussed earlier today, Pfizer here today firing off. A little bit of a profit taking after the gap out, but Pfizer reports COVID oral antiviral treatment reduced the risk of hospitalization and death by upwards of 89% in its phase 2 study, Coach Frank, and they have immediately submitted that to the FDA for emergency use authorization. Pfizer here gapping out, Frankie. The only question I really have, because for me, a gap out on positive news, especially in healthcare, when you had Merck do it last week and then look what happened today.
Yeah.
I always get a little hesitation in me with these types of strong moves in the healthcare space, because I don't see them always continually moving in that direction. Frankie, how do you approach something like a Pfizer gap out here? Is it something you're just saying, awesome, great, positive news for COVID, you're just golf clapping, cheering them on, or is it something that wakes you up to a potential opportunity?
In this particular case, it's just a golf clap. Good
Yeah,
news.
I figured as
real
much.
Good real world news. There will
Yeah.
be scenarios where that gap occurs and it takes out big technical catalysts, big resistance zones or support levels, right? Stuff like that, where building a trade becomes, well, it don't matter why it broke out, it did break out type of philosophy, right? With
Yeah.
something like Pfizer, there's just, where's it go, right? I mean, even if I knew how to get into it today, which I don't, right? Even if I wanted to build something right away, I've got to navigate those recent highs. So yeah, it becomes a good story and maybe good news for the sector.
That's how I see it.
But good story for sure. You love to hear it.
I see it as a positive human interest story.
Correct.
No, it doesn't wake me up as a trader. I'm like, okay, moving on. Fantastic.
Yeah.
All right, let's talk a little bit about commodities here, and let's start with crude oil, Frankie. Crude oil coming back off. Tested a breakdown here. Tested a breakdown of 80. Firing back off here today post OPEC, where they did maintain production levels as was anticipated here. OPEC, we talked about this a little bit yesterday, talked a little bit about it with Coach Mark as well earlier yesterday as well. And basically, what I said yesterday on the halftime report, if you're OPEC, after oil going to zero last year, losing money, finally you've had your balance sheet recover, I think you're standing pat here. You're standing pat. That's what they did. Frankie, technically a threat of a breakdown, firing back off here today. We've had slowing momentum in the trend. We've had pattern violations, moving averages all over the place here in the short term. Frankie, we downgraded last week crude oil. Where's your head at this week from an overall ranking perspective? And I believe last week, what was our ranking? It matched energy, I want to say at 20. Or energy was 25, oil energy was 25, oil was 20, oil was 20, right?
Correct.
where's your head at now? Because is this to me feels like another downgrade, even with the firing off response here.
I would agree 100%. I've said it many times. People on the halftime report probably get tired of me saying it, but when crude breaks that 9, that momentum's over and it needs to reestablish itself, in my
Mm-hmm.
opinion. Like as soon as that changes, that's over. And this was just follow through of that. Unlike, last week, now we have broken support, right? We're firing back nicely today. We're now below those moving averages. The 9 is now below the 20. And yes, that can change in a hurry, but that's where we are here today. So it was kind of confirmation of the slowing momentum,
Yeah.
right? If to me, at least, if you will. On the other side of it, you are kind of sitting, we did kind of bounce right off of that weekly 9. It's I think this is one of those. If this was, a 35, I wouldn't
I'd maintain.
probably make a case for a
Yeah.
downgrade. But being when you're at the top and you've had all that momentum, usually that's the way it's going to go, right? You're going to slowly, gradually work your way down. So for me, this would be another downgrade because we broke support, because of the changing interaction of those short-term moving averages until this thing kind of regains its magic. And to me, right now, at least, that would just be the breakout, right? Just north of
You know,
84.
I honestly, Frankie, don't even know what it would have to do today for me to change my opinion on the momentum shifts over the last week and a half. I'm not sure it could really do anything. Momentum shifts are real, volatility
Yep.
shifts are real, and crude oil has obviously violated, the 90 EMA a week and a half ago, the 20 SMA this week. You've seen a breakdown for the first time. You haven't reestablished support levels from an intraday perspective. I just feel like it's you got to respect slowing momentum and you got to respect volatility shifts. And those two things, when you couple those things together at the top end of charts after a run in crude oil, and I honestly, I this is like gospel to me for crude oil, but this is pretty consistent regarding any technical
Hmm.
condition at the top end of charts. You got to respect volatility shifts. You got to respect slowing momentum. And I've said this many, many times. You got to get to the point where you understand when a trend is over. This trend that drove from 62 all the way to 85 is over. It's done.
Yeah.
There's no trend any longer. You have a double top at 85, a double bottom at 81, and a violation of moving averages and a test underneath 80 with no clear support level. That's what you have.
Yep.
You have volatility is what you have. You have uncertainty if what you have. And in those environments, I do think it is appropriate to reduce to maybe tap on the brakes a little bit, right? Yield
Yeah.
sign,
100%.
tap on the brakes a little bit. I think you're in wait and see mode here in crude to reestablish. It doesn't necessarily mean plays in energy are over. I still think CVX looks extremely good above 115. I think that is tradable, and I think that will be on the options report this weekend. And so it doesn't necessarily mean that plays are done. It just means you're not going to see the momentum and the easy market that was dominant in the energy field from the breakout of or on CVX from 100 on.
Yeah. I think that's a good way to look at it.
All right, let's transition a little bit. Let's talk a little bit about gold here, Frankie. I've asked every coach here this week and every coach last week, help me figure out gold here. It is just volatile. It's random. It drives where it wants to drive. What is your read on gold?
It's in a big range, and you
Oh,
don't
that's
you don't mess around from a swing trading point of view,
uh-huh.
at least when you're in a big range, right? You let it work itself out. The day-to-day price action, unless you are day trading gold, which I imagine I'm not a day trader of gold, but
I no, I'm not.
I would imagine that they're having a fairly good time because of that volatility.
I don't know, dude. Wickety wick nonsense.
Well,
That drives day traders crazy too.
yeah, it just depends. Yeah, I guess it depends on your time frame of day
Yeah.
trading, right? But
Oh,
I'm not that guy.
algorithms. Yeah,
Yeah, yeah,
algorithms.
the
They're
algos have a good
enjoying. The
time. Yeah,
algos
maybe
are
that's the
enjoying
way
it.
to put it.
Yeah.
The algorithms are having a good time. Listen, this thing is a choppy mess. The storyline's not there. It's in the middle of a range. If there has ever been a point that you just say, I'm just cash flowing my gold until I figure it figures itself out, in my opinion, this is the time, right? Let's just
Well,
sell
and
some covered calls on those things. Let's write some naked puts on some stocks that we like when we get some dips, but let's not get too crazy directionally because quite honestly, it doesn't know, right? And that's
well,
being
and
reflected in the
Frankie,
movement.
I said earlier this week and I said it last week as well, but I did say it this week as well. I said in GDX, that's kind of been where we've been looking at a little bit in gold. It's not the accumulation phase is over. You're in cash flow stage.
Yep.
Like you are in lock that risk gram down, cash flow, and there's too many other areas of directional goodies out there, Frankie. There's too many great trades out there to mess around trying to figure out what's happening in gold. We love GDX. We love gold miners. We're going to love them for a very, very long time. The same way Mark loves his Bitcoin miners. And quite frankly, after the podcast last week, I might be loving me some Bitcoin miners in the future. I really enjoyed that conversation with Coach Mark. But we love the miners, but we all know what the miners can do. And anybody that participates in the miners, they have prolonged stages of neutrality and volatility. And that's why we kind of like them for covered calls, though, because we can always get a good cash flow rate on them.
Yep.
All right, Frankie, let's talk a little bit about, we talked Bitcoin miners, right? Bitcoin miners. Let's talk a little bit about Bitcoin here, Frankie. Oh, first candle, honestly, that has got me a little concerned from a technical perspective is today. The downward movements in price, the chop, the volatility, it was riding that 20 SMA, Frankie. We're testing that philosophical belief against the 20 here today. You are slightly underneath that. Let me give you a little bit of an intraday read here, Frankie. Look at that intraday support. You got some heat. Look at that heat, Frankie. You got some heat coming into that. You got some heat coming in. 60,000 looks like the next level down, Frank. If we do close underneath the 20 and close underneath 61,000, okay? That intraday level. Would you say this retracement is now something else?
I would say if you played the retracement, that's not the path that you wanted it to go. I would argue that it hasn't fundamentally changed because you were really, whether you knew it or not, you were really betting on 58, whatever those lows are on the 27th and 28th, right? You were really betting that it was going to stay above that and go above that last high first, which is still 100% possible. Right.
Yeah, I agree.
So regardless of where we look,
trade's not over.
But and so your retracement's still there. I wouldn't be panicking or freaking out or cursing the Bitcoin name or anything like that. But I certainly don't like the development. No one really likes to get stuck in the pullback on their pullbacks, right? That's no fun.
That's one where you just stare at the chart saying, please.
So exactly. And patience, has a tendency to pay off over time, but not the great look that you would like. I don't know. I mean, I don't think there's a good trade unless we're talking breaks now on Bitcoin.
Let me ask you a specific question. Okay. Let's say you gobbled up this here. Okay. So there's a couple triggers here that were consistent, right? You had a trigger here. I don't think it confirmed, but traders will see that as a flag off the 9.
You could see the argument.
Absolutely. 100. Well, momentum here, flag 9.
You would fault no one for taking that trade.
No, absolutely not. But here did confirm.
Yes.
That is absolutely a confirmation candle. And this is a secondary confirmation candle. So there have been 3 scenarios over the last week and a half where you could have legitimately seen this as a triggering effect, correct?
I'd agree with that.
In all 3 of those scenarios, your stop loss is either under 60,000 or it's underneath the pivot point of 57,800.
Correct.
Okay. So if we come down to the intraday level, let me ask you a question. If your real threshold here is 60 by 58, you see those clearly there. Right? This is the flag. This is the confirmed off the retracement, and this is the continuation, right?
Correct.
On the daily chart. That's
on the daily chart, yes.
Yeah. Here's an intraday at 61. Here's your intraday at 60, and here's your ultimate intraday at 58. Okay. If that flag is being traded here, that stop loss is absolutely under 60,000. 100%. If you're triggering on this one here, that stop is underneath 58,000.
Absolutely.
You got to get it under the pivot. If you're doing the secondary confirmation here,
probably
you're underneath
50.
You're probably 50-50. I would say it's 50-52. You could legitimately do 58 and be fine, right? But I would argue for right under 60 on that.
Yeah, okay? And I'd argue for under 58. But yeah, so that's the 50-50. Both sensible, right?
Both legit. both legit. And no discussion was at 61,000 though.
Correct.
Right?
No, not at all. Those
Okay.
were your two discussions.
And so I kind of think you got to let 61 play out and take the risk to 60.
That would be my read of it too.
Yeah.
That would be my read, because again, I mean, it's not pretty, and I would expect, we're in for some fights, and we are running hot into that intraday support. It's not what you want to see from a
It's
bullish point of view,
not,
at
but
least.
Frankie, the last hour and a half, support's holding so far.
But support is held, and how surprising would it be if it held? Right? I mean, it shouldn't surprise
in
any
a
of us.
market that wants to buy everything.
Yeah, I mean, we're
not bad,
not too shabby.
I like the probability.
Yeah, not too shabby at all. It's a little choppy. If I'm looking to add Bitcoin, this is not the time. If I did get
you're in trade
pullback,
management.
If I'm on the pullback, I mean, it really is kind of that decision. Do I want to move from the pivot to that intraday support level at 60? And I think that's the only real conversation I'd be having with myself.
One additional conversation I'm having with myself is I wish Coinbase didn't have earnings next week.
I know.
That is one conversation.
I found a few stragglers.
There's only, oh man, Frankie, it's been 489 S&P 500 companies have reported so far. Oh, we only got 11.
We only got a few.
Maybe it's not 489, but we only have 11 next week, right?
We don't have many left. Yeah.
It feels like we're done with earnings.
It does. This is like, this upcoming week is straggler week, right? You've got Disney and PayPal, and then Coin and Dash, and some of those things are coming out, but it's straggler week. It feels like it's over. Yeah, it does.
Yeah, it does feel like it's over. And honestly, I'll have a nice little earnings update on Monday, and I'll have some earnings roundup, like you said, a Disney report, a Coinbase report next week. But nothing like I've had to do in the last 2 weeks. I'm so excited. I might be the happiest market participant out there.
You're not. I'm happier.
Our joy in not assessing earnings from a technical perspective, I would say it's fairly equivalent.
It's pretty close.
It's pretty close.
I'll give myself the nod. I think I probably complain more than you.
Okay. Can I just real talk here?
Yeah.
Real talk here. You hate it more than I do because I geek out on more macro themes than you do.
Correct.
Right. You just hate it in general.
It just messes up a lot of good trading patterns.
Get away. Never report earnings. I don't care if corporations lie to us all the time. Just never report earnings.
Just leave the charts intact. Yep. Leave them intact. I'm a numbers trader. I want lots of little trades. And when earnings come around, that really cramps my style.
But honestly, Frankie, one of the things, outside of every other reason why I love you and Tyler, but one of the reasons why I love you guys so much is because when I do geek out on a lot of macro themes, you two are the two. They're like, I don't care. All right. I'm in my head a little bit.
And it goes the other way too, right? I mean, I need to be aware of these things. I just don't like them, and so having somebody who can share, someone knowledgeable that could share with me that I trust their analysis is really helpful. Saves me time from doing things I don't like.
Well, let me rapid fire some of these good old fashioned earnings reports here today, and not a lot of headlines. Like this week was not a brand name type week when it comes to trading, but what it was chock full of was extremely popular trading names, right? You had your brand names, your big dogs last week, but you had a chock full of extremely popular trading names like Airbnb today, Uber today, Square today, Sunrun, First Solar, Peloton today. And so no Apples and Microsofts, but we got some to cover nonetheless. Let's start with Square here, Frankie. And Frankie, I'm going to rapid fire, and then I'm going to throw it to you, and you give me your technical read as Square tries to fight a good battle at that 200-day moving average. Square comes in at 74 cents a share versus the expectation of 34. Revenue actually missed 3.8 billion versus the 4.6. That represented a 26.7% increase in revenue year over year. This was a beat and a miss, and is simply not good enough on the revenue. I think the market's got it right on the sell side. I'm not taking too much positive from Square. It's Square. You got to beat and beat, Frank. Simple
you really
as that
do.
For me.
You're
simple as that. You're not a utility company.
No, you're not a big Staples that we can lick past. Yeah, you got to beat.
You're a high value Square. You got to grow. Simple.
You got to grow. Not the numbers you're looking for. Not a great looking chart.
No, it's not, Frankie. I'm looking at a 240 type support level right there in the 200-day moving average. Frank, you tried to test up a little bit on the intraday. You see the overnight action here. It just got absolutely rejected earlier, though. Look at the natural price response, though. It was down, consolidation, pre-market. Look at that. Well, what happened? That was the labor market numbers, Frankie. That's all that was. It got rejected at the cash open. It got rejected on the actual earnings announcement. There's not real buyers there. That's a little bit of fake news nonsense right there. I'm looking at that 240 support level, Frankie. A violation of that, I don't see any real strong support until we work into that 225 by 220 level. What's your read on a potential short post earnings on Square underneath 240?
Yeah, this 1-2 combo of sitting on the 200, pushing through the 200 daily right now and running right into the 50 weekly, a little more downward movement. So for me, it might be a little lower than 240 just to get through that 50 on the weekly.
Yeah.
But
yeah, let me see that. Hold on.
I would not, if I owned Square, I would be assuming that I needed to prepare for it to drop to 225.
Yeah, I think 225.
That's how I would be.
Nothing crazy.
Nothing
right?
crazy.
It's in the range. Nothing crazy.
I don't love the idea.
Makes sense.
Right. I wish I didn't hold two earnings in that scenario. But it is what it is. Yeah, it's not a good look. It's probably a difficult trade. This is the type of trade that 2 or 3 bars where we get kind of sit at intraday support and then give us a secondary breakdown can really be intriguing. Can be a little difficult the day after in this type of case, I would say, with just the different little things we have to navigate in the form of those moving averages.
Well, it is a stock I'm going to bring to the table in the scouting report meeting later on today. We'll see if it makes the cut with all the coaches. That's Square post earnings negative response. Believe the market has it right on that one, Frankie.
I wouldn't buy it.
Let's move. That's always a good little thing to do, Frankie.
Yeah, the Bears do not have to worry about me getting in their way. I can promise that.
No, the buyers aren't being like, no, we're going to fight for Square. There's no fight there today, guys. Let's go ahead and let's take a look at Airbnb here, Frankie. And I didn't have a chance to dive into anything other than raw numbers and guidance reports. I do believe Airbnb had some positive commentary on guidance moving forward, though. If I catch something, I'll put it into the Discord channel. But the raw numbers were good enough for me here, Frankie. Outside of the commentary on guidance. But raw numbers, 122 against 84 cents on Airbnb. Hey, Square, this is how it's done.
This is how you do it.
This is how it's done. You beat and you demolish. And then you say, you know what? We also made $200 million more than we were expected to make too. Fat bonus checks coming. $2.2 billion versus the $2 billion expectation. We don't have year-over-year numbers for Airbnb. It's a recent IPO. But once again, raw numbers aside, very positive response to the price action. This is what we call a gap out and runaway gap here, Frankie. We're looking at a little bit of a breakout, overextended price action. I think this one's simple. Frank, you agree or disagree? I think you're purely waiting on secondary patterns here.
You really have to. You're too close to the tops and too far away from
the support level.
Yep. Let me just complain one more time about earnings. You know me well. You know me as a trader, right? You know the things I like to trade, and the
like
things
a trigger above 180 is what you like.
Can you tell me with a straight face that if earnings weren't there? I mean, that breakout yesterday was almost a picture perfect. I mean, that was like a me chart. I'm not alone, right?
Oh no, Frank! Look at the cleanliness of that resistance channel right there, 170, 175, 176. Look at the nice hammer candle on your breakout with it kissing up against 180. It's pure. It's pure technically. And Frankie, you can complain to me all day long technically because I have those exact same complaints all the time when it comes to earnings reports. But once again, Frankie, secondary pattern analysis here.
Yeah, you're going to have to let something develop in the days to come. I think. I don't even know how else you would try.
A lot of us traders, Frankie, we treat our watch list like they're the end all be all of list, right?
Sure.
Would you add, if Airbnb was not a stock on your watch list, and again, for those of you who are new to trading, watch lists are just lists we create from a bull, bear, cash flow, credit spread, volatility. We create a lot of different watch lists. But if you have not had Airbnb on a watch list following this type of price response, following a good earnings, is it at a minimum, is it something you're putting on a watch list so that you can start tracking over time?
Absolutely.
I agree.
Absolutely.
I agree.
Interesting name, good volatility. It moves, right? You've got you get there's really good trading opportunities beyond the numbers, right? Which is a good enough
Agreed.
reason to add it to a list. So yeah, for sure, this is a watch list guy for me.
Agreed. Let's move on to Uber here. And Uber, they had last quarter, we're like, hey, we made some money. We made money last quarter. Buy us. Uber doesn't make any money this quarter. Uber comes in at a negative $1.28, just an absolutely horrific number. Revenue came. Oh, and by the way, the expectation was a negative 32, so they just got absolutely blasted here from an EPS perspective. Revenue actually came in above the expectation, so we have one of those mixed reports where you have a beat on revenue, and this is kind of rare because usually when I see these mixed reports, it's more the beat on EPS
Right.
and the miss on revenue, right? Well, this one's just polar opposite. Big time miss on EPS. $400 million beat on revenue, nothing to shake your leg at. 4.8 versus 4.4. Revenue grew at a fairly impressive 54.8% year over year. What happened here, Frankie, to offset some of the EPS miss was some, quite frankly, nonsensical commentary on guidance, and I will leave it at that. Basically, they have a guidance of range that is ridiculously wide, and they tightened the range is what they did. But
Okay.
yet people saw that as a positive because they increased the lower end of their guidance range more than they contracted their top end of the guidance. This is nonsensical. It makes absolutely no sense. Let other people make up anything they need on Uber. For me, I feel this was a sell. I just feel this was an environment where you're coming off the lows. Certainly, you got to show something. That miss on EPS was nasty. It
That's
was a
big. That's a big miss.
nasty miss on that. Wouldn't be chasing here, Frankie, but technically here, do you see anything from a reversal perspective?
Kinda an
All right,
ugly
that's
one.
all I needed to know. That's all I needed,
Yeah,
Frankie.
yeah.
That's
It's
all I
there's
needed.
nothing here right now. Get. Yeah, yeah. There's just too
It's
many layers
gross.
on top of it. It's gross. There's lots of clean charts out
I'll
there.
tell you.
I'm not going to try to figure out Uber.
Okay, how's this one, Frankie? Their chart is as wide range as their guidance report was. It's
Fair
just
enough.
terrible. Somebody else get a better read than I have on it. Pinterest here, PINS, Pinterest. Now, these companies, the social media companies, obviously from Snapchat on in earnings were under fire for the privacy agreements, the new privacy agreements coming out of Apple. Well, Pinterest here, 28 cents against 23, 633 against 631, beats on both EPS and revenue, but the same concern you have on Pinterest that you had on Twitter, that you had on Facebook, that you maybe not as had on all of them, but they did lower guidance here. Some of that in response to the new Apple iOS privacy concerns. Frankie, you're trying to fire off a little bit of a low base here. I don't see anything from the buy side. It's got a lot of work to do, in my opinion, to get to that point. What's
Yep.
your read?
Yeah. If I'm thinking buy, wake me up when I get either a double bottom or a higher pivot low. I will
Yep.
not be the first one in. It could
They
have been
gotta
an
go dig. They gotta go dig some holes and fill them up, Frankie.
exactly, exactly. Give me a new level of resistance while holding or building on support, and then maybe we can talk Pinterest. But that is not a this week problem that I will have
Nope.
to deal
Gotta go
with.
put the work in. Gotta go put the work in for Pinterest. Let's talk a little bit about the solar components here, Frankie. Sunrun and First Solar both reporting. Sunrun comes in at 11 cents versus the 5 cent expectation, so officially a beat on EPS. Revenue also beat at 438 versus 414. That represented a whopping 109% revenue year over year increase. A little bit of a faded response here on earnings, Frankie. That doesn't necessarily concern me. What I'm looking for is two things here on Sunrun, Frankie, and I want to get your take on it. I like a retracement analysis that comes into the rising 20 right there around that 200-day moving average as well. I think that would be interesting. Or we recover from here and we look at that breakout of 60. Which one are you looking at?
The break of 60 is the one that I think is interesting
Yeah.
because if I do get the retracement, and I probably wouldn't like it. You don't know how it would look, but I'm just guessing. But even if I do like it, I would have to have, good risk to reward to that resistance level, because I have to assume that it's going to be hard for that to break. So just knowing me, what I like, I'm pretty much the break of 60 now. The break of 60 is really intriguing, really
Agreed.
intriguing. And there's nothing, hey, let this pullback happen and let some folks get an opportunity. I need them. Just because I probably won't be one of them doesn't mean I don't need folks to come in on this retracement and put some faith into the stock to get me to the opportunity to break out in the first place, right? We're in this together from a bullish point of view, if that's how we're approaching it. So yeah, the breakout, I 100% will be on my watch list. If this thing breaks out, I will be there to make a decision.
I think the
That decision
breakout's
might
the
be.
easy trade, right? I think the breakout's the easy trade. Weekly, it looks picture perfect right there with the trigger above 60, right? And you don't
Yep.
have a lot of concern on the weekly chart with the breakout of 60 until you start getting into 65. So I mean, target's pretty simple here, 65 by 70 as well. I think the breakout trade is a very simple trade to execute here.
Yep.
I guess I'm just geeking out a little bit on the earnings potential here on that retracement if it does play out.
Sure.
Because if you look at that support level here, right around that 53 to 54 level, and obviously more downward movements of price, doji, upward movement in price type
Right. It's not
scenario,
get
right?
there. Right. But
Right, we're not there yet. But I could see a scenario where you got good momentum in trend, pullback, retracement, and again, legitimate retracement. I'm not talking flag, because if you're flag, you just trade the retracement. I'm talking legitimate retracement here, a legitimate pullback, not a random buy the dipper out there, not a
right.
flag or intraday support.
Long intraday momentum into those
Traditional
averages,
retracement
doji,
coming
upward candle.
down into your 38% retracement on the Fibonacci. I love that, right? That zone right there between 53 and 54. Let's see that work itself out. So, I'm right there with you, Frankie. If we hold from here, I think you're lining up that breakout on Sunrun pretty good. If not, I do think the retracement could be interesting. But again, I do agree that the clearest path to victory here, Frankie, is just for it to hold and eventually break and run. Reason we spent a little bit of time on that, I think both Frankie and I like that $60 breakout potential on Sunrun.
Sure.
Just wanted to get
I
a
know
little
I
bit
do.
of the retracement analysis in there as well. First Solar also reports here, Frankie, and we got a little bit of a retracement, but a wide range candle here on First Solar after a report where they reported 42 cents versus 63, so a miss on EPS. Revenue also missed at 583 versus 689. That contracted revenue 37.1% year over year. I don't know why it's not down more either, Frankie, especially with Sunrun's positive response here. But unlike Sunrun, First Solar does provide guidance, and we know how important guidance is. Well, First Solar reaffirmed guidance within the top end of the range, a little bit of a positive tailwind to offset some of the misses from an EPS and revenue. You're looking at a doji, and again, miss on EPS, miss on revenue, and I'm being very gracious with the commentary on their guidance.
Right.
It was more affirmed than within the range, but I can understand why market participants would take it as such. So you're seeing a little bit of a miss and a slight positive on the guidance, Frankie. Wide range doji candle within a range of support. Let me give you the retracement on First Solar versus the breakout potential on Sunrun. Which one you looking forward to the most?
Well, with the backdrop of the earnings, I gotta lean to Sunrun on the breakout.
Yeah, me too.
Itself. I probably would lean that way anyway, but any tiebreaker I might have had is, I mean, that's how I'm going to use fundamental analysis and earnings, is to tie break, right? To separate some of these things.
I am glad I provide you a benefit, Frankie.
You do.
I'm glad.
I do. I appreciate it. I do appreciate it. 100% do. However, I much prefer, if the question was a pullback on run or the pullback on First Solar, I would much prefer to take my chances on the pullback on First Solar.
Hey, it's got momentum in trend.
Yeah, we need an inside candle on Monday, basically, right? And maybe even into Tuesday. But if we can hold this general zone, and we'll just call it that rising 20 to kind of give us that line in the sand, I could be interested in the retracement independently on First Solar. I do think we need at least one inside bar before we get too crazy, though.
Here's the thing. I really like First Solar's retracement. Technically,
It's pretty decent.
I really like it. And I really like the 110 breakout channel. Like, I think that is a foundational support level.
I
You
would
build a
agree.
house on that support level,
I would
right?
agree. And that's the old, yeah, that's some price history there, right?
Yeah. I just don't love their earnings, right? I love the technical condition. I think solar is kind of solidifying itself a little bit. But I think that inside candle that you talk about would alleviate some of my concern.
I think so too.
Yeah.
I think that's why it's important at this point. I mean, the one thing that we haven't seen is the higher intraday high during this entire
We
retracement
haven't
phase.
seen. And Frankie, can you talk about that? Because we cover retracement analysis in live markets when it's doing retracements, right?
Right.
But Frankie, talk about the importance of actual confirmation here when you're talking about retracement analysis.
Yeah, I mean, the simple reality is if you think about retracements, it's a short term, downtrend, so we're talking bullish against a longer term uptrend, right? And we're just trying to get these two time frames to realign. My
Yeah.
money will always be on longer term winning, right? If I had to, blindly bet cold, I would 100%. If you said, this is it, the only thing you can trade ever again is today and then it's First Solar, I would take my chances on the bull side. But luckily, that's not how we do things, right? So what we kind of want to do is, I kind of put it like this: if we can't make a higher daily high, then we're not going up, right? At least nothing
Yeah.
substantial. That's going to be the first step to potentially going up. I don't know that this is the bottom, as Maddie said. I mean, there's a rock solid foundational argument at this 110 zone, but until we
Well,
actually see it move, that's all that it is, right? We see it, we respect it, we build our premise of, okay, we might see that development here because of it, but
can
it's only support if it holds, right?
yeah,
Yeah,
I
go ahead, Maddie.
agree. Can I ask you a question on that? Because we talk about multiple time frame analysis a lot, and I always talk about this as, listen, the day traders got to make money before the swing traders make money.
Yep.
They're the ones taking the risk to put in support. We're not doing that. We're
Yep.
waiting for confirmation. Well, if the day traders can't even break out of intraday resistance, why do you think your swing trade's going to do it?
Exactly. Exactly. We got to build time frames, right? The 5 minute into the 15 and the 30 and hourly into the daily. And if you understand that, you don't feel so worried about, but what if this runs up on Monday and I miss out? You just, okay, I do then,
So, except
good
one
for the day
reality, you're
traders.
going to miss out a lot in the market.
Yeah, good for the day traders. They
Yeah,
bought a
good for the
breakout and
day
it ran,
traders.
right? Be happy for them.
Support those day traders. They need money too, guys. Let's go.
Exactly. But it's just amazing what one candle can do, right? You get that one inside candle. We probably are building, creating a higher level of support, pushing through resistance or getting a lower level to make it easier to push it through. So that's why it is so important. And that's why, you so often as a trader, you
Mhm.
feel like if you don't get in the second it happens, you're slow. What's wrong with you? You missed it. But how often is that the case, right? I mean, sometimes it is for sure, but a
Well,
lot of times,
it's the world of the market and assessing behaviors and fundamentals and technicals and economics and earnings, and things change on a daily basis. There's no doubt about that. But you never need to feel like you have to rush right now without confirmation, because if you're doing that, those are emotional decisions. Those aren't technical decisions.
nope.
Right. All right. Let's talk about Peloton here, Frankie. We just got done talking a little bit about the solar companies that reported. Peloton here, there is not a lot I'm going to say positive to Peloton, because quite frankly, the market participants have it right on this one. Peloton comes out with an absolutely disastrous earnings report, 125 to the negative versus the expectation of a negative 115. So we got a miss on EPS. We got a miss on revenue, 805 versus 810. That resulted in a paltry, terrible 6.2% revenue growth year over year. Frankie, I've said it all week long. Growth companies got to do what?
It got to grow.
They got to grow. Peloton, not only did you not grow in the previous quarter, you're not going to grow next year either, as they came out and they did a double whammy, Frankie. I don't even know. This isn't even a hat trick. This is four. What's four? If we're going to call a beat and an increase in guidance a hat trick, I need to know what to call something when they miss on EPS, they miss on revenue, and then they both simultaneously lower short-term and then lower long-term guidance as well. There is nothing to look at here on the positive, in my opinion. Once again, market's down 34%. Market has it right. This is a terrible, terrible, let me say it one more time, terrible report coming out of Peloton.
Yeah, that's a nice way to say it.
Let me say it one more time. This is a absolutely horrifically terrible report where people should be fired because they did not produce.
I think that about sums it up. Boy, that
Okay.
is a nasty, nasty move
nasty
too. And
candle, man.
well, you mess up that bad, you are probably going to get punished.
Oh, let's go look at the labor market numbers again. No, and again, there's nothing really to say here. When you come out and you do as bad as Peloton does, you can't look at it any other way. They have work to do. There is nothing to see here on the buy side, and there's no value argument here either, as you're gapping underneath absolutely everything. You do not have another support level. Frankie, I'm going to give you a number here. You don't have another support level. And by the way, your last one was at $80 until you get to $40.
Yeah.
There is no support there. And so, wake me up when it actually finds some degree of support, but the market's got it right on a gap down, sell down here.
Yeah, I agree.
All right. Last two I got for you, Frankie, and then we're going to do another editions of Frank's charts.
Ooh,
Frank, I want to get your take on something. We're seeing industrial XLI break out a little bit, fighting for that breakout channel. Let me give you a little bit of JCI here today, Frankie. I know you like Johnson Controls.
I do.
I know you like clean breakouts even more, correct?
Yeah, more. Yes, always will choose them over Johnson Controls.
And you also love charts that don't have earnings in front of them, correct?
You know me.
I got you on the triple whammy.
You got me
here
figured
today.
out.
I do. I got you figured out. Well, Johnson Controls reports 88 cents versus 87. They beat on EPS, slight beat, but we're talking industrial here. Revenue did come in line, represented about 7.4% year-over-year increase in revenue. Had a little bit of concern in their quarterly guidance, reaffirmed yearly guidance. I got this as an extremely lukewarm, neutral report. Love the price action response here, though, Frankie. Doji at the top end of the chart, clean chart above 75. Question I have for you, because I know you love the trigger at 75, but do you hesitate given the fact that that resistance channel at 76.5 is staring down the barrel at you?
Yeah, I do. If I could figure out a way, I was really quickly prepping a trade on it.
You were trying to get reward to risk work out there, weren't you?
Yeah, just.
Well, let me ask you a better way. Do you have to target as a technician the previous breakout here?
I do.
I think you do.
Personally, yes. Well. I make it a rule to assume that it's not going to break through that resistance level, and thus any front-runny breakout trades, which is why I generally am not a big front runner unless it's like cup and handles, right? On the breakout, because I assume that it's not going to break, so I have to get that trade to feel comfortable at that level. I'd much rather wait for the break, and if it breaks early next week, a probably good chance that XLI and vice versa. I'd much rather play XLI, to be honest with you.
Yeah, well, again, you're looking at a sector that looks very similar to what Johnson & Johnson or JCI does. I'm writing Roman letters there.
I do, however, like that, going forward as a breakout candidate, if we kind of clean up through all of that stuff, because I like its chances to get to 82 ultimately.
Let's check out that weekly here. Good retracement, navigating the old breakout channel. Look at that beauty trend, though. I think you just wait for the ultimate break here.
I think you do too, because I think there's room. That's where most of the profit is on this thing, right? Is beyond 76 and change, right? And
look at that run, 9 EMA run right there. That's beautiful.
It's a great trender. Oh yeah, that was an insane run.
Well, because of the consistency of that trending, though, it gives me confidence in just waiting for that trending condition and not trying to front run any breakout, though.
Yeah.
All right, last one here, Frankie. Last one, and I don't have a question on the trade on that, but I will on some other stocks that this company has something to do with, and that is DraftKings here. DraftKings comes out with a negative handle of 135 on the negative. The expectation was a negative 111. So we're starting off pretty poor on a miss here. Revenue was a miss as well, 212 versus 232 million. And we reaffirmed a weird guidance report, but gap down, little volatility. Again, I'm not too surprised by what's happening in DraftKings here today. Don't necessarily see any trade here, Frankie. And again, I don't want to just take away from you. So do you see anything here?
No, I mean that's just too big of a zone, right? In the 40 range, they've got old resistance, old support. It just, I don't know if it should be 42 or 38. So it's just too rangy. What I am interested in seeing is how it holds up at this zone.
Yes,
right.
I am too. Right, it's specifically north of 40 for me.
Yeah, I mean, because like just from a long-term pure prices where the price is perspective, I mean, history says that buying right here is a good idea, right? As ugly as it was back in the early part of the year, buying at 40 really worked out. As ugly as it was in the summer, buying at 40 really worked out. So I'm really interested. I'm not going to be that guy, certainly not the first one in, but I am
not
interested.
market order 40. No.
Can hold this zone. If the zone gives out, probably the breakdown is something I'm not interested in, but secondary patterns beyond that, maybe.
I said on Peloton, there's no value argument from a technical perspective because anybody who would make a fundamental value argument, I wouldn't listen to. So technical value arguments for me is when you're dealing with downtrending environments and you find these technical zones where over time they just play out, right? They become these magnet to a certain extent buying zones. And when you're looking at DraftKings here, I do think you have a little bit of a technical argument at 40 from a, by the ultimate dip type candidate perspective. But again, I will say this a million times. I've said it a million times. We're not those traders who just buy 40.
No, that's
we're
not
the traders who wait for double bottoms and double tops at 40 and buy at 43.
Yep.
And so it when you're seeing this type of movement coming down with some heat, you just got to let it play out a little bit. You just got to let it play out, because if it does form a W here, that's going to be a beautiful, beautiful chart, and it will be a very good tradable instrument, but it's just got some time here. Yeah. Frank, what might not have some time, and as we transition into one of my favorite segments called Frank's Charts. Fresh.
So creative.
We are so creative at Tackle Trading. We are so creative. But I want to get your take. First chart of the day, Frankie. All right. We were talking about DraftKings. I want to bring you Las Vegas Sands breaking out after reversal. I want to bring you Wynn Resorts breaking out. It does have earnings coming up, but breaking out on a reversal. MGM breaking out. Question I have for you, Frankie. If you had to pick one or the other, Frank's Charts, okay? You got the MGM breakout against the all-time high. All right. Following earnings, I love the snapback response to MGM today, following some volatility yesterday. Love the snapback response.
I would agree.
Look at the Las Vegas Sands. And again, Wynn has earnings, and that's
so they're kind of invalid.
They're kind of out of it.
Plus, they're Las Vegas Sands technically.
They are, and Las Vegas Sands has a better technical chart too.
Yes.
So would you rather buy the breakout on MGM following the snapback from yesterday's volatility, or would you rather take the risk to Las Vegas Sands knowing that the data coming out of Macau and China is not exactly positive lately?
Ooh, in some ways I look at them as two different trades. Whereas like Wynn and Las Vegas Sands, I would say they're the same trade. But in some ways, I would agree. Because of that, I like Las Vegas Sands, but I only like it with a fixed risk play, like some sort of
option trade,
some sort of a spread.
Bull call, bull put,
probably nothing fancy, probably a bull call. And I do really
volatility here
like that, at least in theory, because there's a lot of upside in this, right? And there's still, I mean, obviously there's a lot of upside in MGM as well. The backdrop of the news from Macau that can get LVS, right? That is a big argument against them, which is where it would purely be some sort of an option play, whatever that exactly, however you map that out. I would want that 100%, and that would be the way I traded it. if I bought a bull call for $5, I would assume I was risking $500, regardless of where my stop loss was placed. So that's how I would
Yeah.
approach LVS. Much more traditionally, MGM. Quite honestly, though, I'm interested in both, and
I
because I do view them as
yeah.
different enough that it's not just casinos.
Well, I do as well. I mean, MGM I see more as a cash flow dividend value. I see them more consistently. Las Vegas Sands has a lot of growth in them, a lot of
Yeah.
growth in them. And Las Vegas Sands they move more on the Chinese news and the Macau news than MGM does
Oh, for
as
sure.
well. And so I see them differently as well. But, I look at Las Vegas Sands, Frankie, and it just in the back of my head, the conversation we just had on DraftKings, right? You look at a zone technically, right? And we were talking about on DraftKings that zone was 40. Well, you look here around 35 ish, right? You got post pandemic here that came in with some heat, 35. Down here, you're in that same type of zone. You've got your slowing momentum, you got your double bottom. You're kissing up against that weekly 20 period moving average, which with the continuation against the breakout today gets that up into that
True.
45 level. Ultimately, I wouldn't call this reversal with confirmation until it breaks out of 45. Quite frankly,
Agreed. I would
think
100% agree with that.
that's where your pure W is. Look at the old support, new resistance. That looks like a W. Well, let's just draw the W, Frankie.
I like it.
We just got it. We just got to draw the W with a nice little epic pen here. Give me 1 second. There we go. So this does not look like a W right there, right?
Nope, not yet.
No.
Good start.
If it comes into there, it does. And then you couple that with that type of analysis. But I do see some potential front running in front of that ultimate breakout here on Las Vegas Sands, given the fact that the daily analysis, once again, let me come down, that you're kind of look at that, the base there comes up, base breakout. It just feels like this breakout here drives into 45, and then the real analysis starts happening. But it's an aggressive front running philosophy here on Las Vegas Sands. I just honestly, Frankie, I just caught it today in my scanning, and I just wanted to run it by you. And I felt like, well, I'll just ask him on the halftime report, and we'll have the conversation there. So I put it on the radar, is what I'm saying.
Put it on the radar. I think you could try to map something with that 45 zone being your target one. But yeah, like the good stuff happens beyond that.
Right? I agree.
That's where
good
that
stuff's above 45
opens up. So, but MGM and Las Vegas Sand, I think both are very much watch list worthy going into next week.
I agree. Coach Frank, we got another edition of Coach Frank's charts coming to you right now. Frankie, I know you got quite a bit of charts for us. Let's go ahead and rapid fire style this. And Frankie, I'm getting a little bit of internet messages, so I'm going to drop my video for just right now to see if that clears up. Okay.
Gotcha. All right. Well, let's just start with a quick rehash of GPK. That was the one I did yesterday for Twitter on my Frank's chart was GPK, little cup and handle breakout pattern going on these guys. Really clean, above 21. I think this guy's a real easy trade. Breakout, is going to put us around 21. Target one is at 22. That's the handle range. Target two is the cup range at $23. Nothing fancy, cup and handle breakout style.
You know, you got to love cup and handle continuation breakouts. You're basically at the beginning point of a new trend, which is typically really good for position traders, really good for swing traders alike. You look at that resistance channel, Frankie, and we'll just call it 21, but whether you go 2088 or 21,
just shy of it.
It's all that same zone, right? You look at that on a weekly chart, that is a retracement with additional confirmation above that level as well. So you got some multiple time frame tailwind here. I like the analysis, and I like the breakout potential here.
So yeah, nothing crazy there, right? That's definitely
it's a cup and handle. It's good continuation.
Yep, nothing wrong with that. All right, let's talk. Let's talk Toll Brothers, an old favorite around here at Tackle Trading.
Something tells me you and I could talk about Toll Brothers for like 25 straight minutes and come away with we like other trades. But I kind of see what you're seeing. Detail it for us.
All right. So we go into some downward movement throughout September and October, right? We got our bear stop out day right around the middle of October, October 13th or 14th, something like that. Got our moving
It
average.
was October 13th. That was the low price of the reversal. Remember that
Okay,
one?
so we got our bear stop out days. We got these higher pivot lows taken
Is
out
this
that
the bear stop out you're talking about right here? Kind of in that range where
yes,
the
yep,
retracement here comes into the 200-day, it pivots back down and then destroys all
yep.
bear's life.
Yep, that's
Okay,
exactly the
gotcha.
case. So I mean, that's a good start. We cleared out a lot of bearish sentiment right there, right? Because
Oh, I agree 100%.
I could see a scenario where on October 8th I got into a bearish trade on these guys. I didn't, but I could easily it could have, right? I
Uh,
wouldn't have faulted anybody. I said, yeah, technically you're right there.
I
So
I don't short home builders, but yes, I could see a scenario technically where pure technicians would say that's a legitimate short, and I would not disagree with them, by the way.
yeah, you would. Yeah, you would have. Yeah, you might not have been joining them, but you would not have been fighting them. Well, they lost, right? And the Bulls start to work our way back in. Now we've really gone into consolidation, and to some degree or another, all the home builders are going through this. I thought Toll Brothers was the cleanest. Because what I really like about Toll Brothers is really, if you kind of think about it, they're kind of in the middle of a longer term range too, right? Between
Yeah,
53 and
but
67,
an improving condition
but
in the short
improving
term, though.
conditions, right?
Yeah.
And recently that most recent low was higher than the previous one. And so it just ever so subtle momentum to the upside. I wouldn't expect these guys to break out and be running into all-time highs in the short term, at least. But I do see a pretty easy path where we work back up to those recent highs at around $65. And if we can push through that, we've got some room into 67, 68 in an area that's showing, fairly well as a whole right now. Also, a really clean, easy trade, I think, to build. Got a few options. We can go today's low for a stop loss, yesterday's. The bottom of the range might be a little tricky from a risk to reward point of view, but it would probably be fairly close. So nothing crazy. Certainly not going to be my favorite trade setup, but I do think there might be something here going into next week in the home builders, and Toll Brothers kind of
Well,
stood out as far as prepping a trade goes.
and it might not be my favorite technical setup going into next week either, but you know what? Simple reality is we love trading home builders.
Well,
we
yeah.
just, we
Listen,
do.
and I hate having favorites because
Yeah.
that implies that I would put more money on one than another.
No, we
I've
treat
learned
things
I'm
equal.
terrible at favorite picking. I am bad at it.
No,
I'm not good.
I like the improving condition here technically, and I tried to draw what you were talking about, Frankie, in your bear stop out day here.
Yeah.
So this is the bearish retracement against that previous downtrend. You had some momentum in trend. That's why it's a legitimate short. You have momentum. You violated the 200-day moving average. Then you flag based pattern, bear flag based pattern coming back up in to lowering moving averages. Pretty legit. And you got a good trigger on the downside. Then bear stomp out day happens where you have that legitimate bear trigger, increases in support, and then once it violates the resistance level right there, that's that quick trend reversal you see. And it's a lot of what I see when we see V-shaped type reversals, Frankie.
Hmm.
When you don't see that traditional double bottom, double top, you see really kind of a right shoulder against the head and shoulder.
Yep.
And so think about V-shaped recoveries like they never had a left shoulder of the head and shoulders.
Yeah.
All they do is increase the right shoulder and then they break out very similar to the right shoulder. And so when you're looking at that here, you see that quick appreciation into the 60, we'll call it 62-ish area. A lot of wickety-wick nonsense that if concerning you, we're not talking about dip mechanics here. You're buying the breakout above all of those wicks, and then you are walking up the stairs, my friend. That is all you're doing here. That's the anticipation on the chart, is you just start walking up those stairs, and we'll see if it can do it. But it started with the reversal. It started with the bear stop out day, and you're looking for a secondary continuation of the trigger above 62.5. I don't have an issue with it.
So yeah, an interesting one, nice and clean one. One you brought up, the first one that you mentioned when I talked to you this morning when we started talking charts, was PCAR, and I was like, yep, I got that as
Yeah,
well.
you and me both at it.
This one is really intriguing to me, probably more than Toll Brothers, if I'm being honest.
Yeah,
Here, a lot of
me
improving
too.
conditions, right? Things are going well. We recently broke back up above a lot of price action around $90, approximately probably closer to 89, but we'll just call it there. Old support, old resistance, also the flat 200-day moving average. Nice pop on the break of all of that stuff. Snap back kind of Cody special style into that nine. Tried to get a little upward movement going here today. Probably not a bad thing unless you were, buying it today, because what we'd really kind of think for confirmation would be taking out these highs, right? This basically yesterday and today's high. It not making it a tough choice today is not necessarily a bad thing. This would just be kind of a follow pattern, right? This is a lot, very similar to a lot of patterns that we like.
Yeah.
Apps is what really comes to mind recently. Apps had a very similar situation, broke out of some old stuff, the 200-day moving average, had a quick pop, had a fast Cody special style drop back out to that old support zone, and then we fired up. And I think that's what you and I both, see, as potential in PCAR, and probably why we both have it on the radar. It's not apps, right? Apps probably is a faster mover, as a general rule, than PCAR. But the idea and the technicals are the same. The thing that I really like about this is if we get that confirmation, I don't see any reason why we're not pushing into that 95, 96 range. We do have some history in there, and I think that's where we do have to start kind of thinking about, tight stops, scaling out, closing completely. But there's a little bit of a window in here. I really do like this type of a pattern. We do need a little more upward movement, but if we, assuming this is the closing candle, which is probably a fair, roughly speaking, assumption, it's probably not going to.
What time is it in the East Coast?
It is almost
about
2.
1 o'clock.
Yeah, almost 2. Right? Yeah, it's almost noon here in Utah, so it's almost 2 out in the East Coast.
So they're post lunch Friday afternoon.
Yeah.
Oh man, they're in the Hamptons, bro.
Yeah, so I'm thinking that this is probably going to be the close-ish, right?
It should be within the range.
I don't think we'll break. Yes, yeah. I don't think we'll break out intraday or down intraday from here. And so just taking out that high would be confirmation for me going into Monday.
A couple things stood out to me on PCAR. Number one was the quality of the support level, that if you're going to trade the flag, which is what I have this as, stop loss has to be underneath the 200-day moving average. You can't nickel and dime this one. That 200-day moving average right there at 89.20. Look at it play a roll over here. Look at it play a roll. Look at the zone over here. You want to get underneath all that chop. That's number one.
Yep, 100% agree.
Number two, you got to like the fact that industrials it's faded a little bit, following a positive response to earlier from an overnight action perspective. But overall, you are talking about an industrial sector that is going to be looking at an upgrade here, as it navigates that breakout channel. And you're looking at I was going to say Johnson Controls again. You're looking at PCAR here, setting on the 200-day moving average after a good momentum recovery following a reversal formation. You've had a positive response to earnings along the way. And then when you look at this from an intraday perspective, I got this as a pretty simple flag-based pattern with the double top trigger against 91, Frankie. When you're looking at it, and I'll draw the line here, you see that line there. Yep. You see the support build, and then you see that double top over the last 2-day wicks at 91. That seems like a pretty legitimate entry above 91, stop loss underneath 89. The question that you have, if you're going to take that risk, is where's that target? And I think you legitimately could be looking at the 95 level.
Yeah, I think that's exactly where you're targeting these guys. First target, however you're doing that, I think that is that secondary target that you are looking at as well. The risk to reward will be there to that second target, depending on how you individually might want to do the first target. You might have a difficult time getting 1-to-1 to that recent swing high.
If your first target's 92, you can't put a stop loss underneath 89.
And I think you have to. I think you have to put your stop loss below 89. In this case, I think you're just asking for trouble if you do not.
But I also don't think you have to target the previous high against a flag.
I don't think
like
you do.
A retracement you do, but
that's the first place I look. Yeah. That's where I would like to, but I do not have to. Per rules, that does not have to be the place where it would be. The rule would be, my rule is it would have to take that out plus an ATR.
Well, I always like to look at it. Are you trading a momentum pattern or not?
Yep.
If you're trading a momentum pattern, you can easily target above the previous resistance because you have momentum.
Yep.
if you're trading a slowing momentum pattern like a bullish retracement is, because you're waiting for the momentum to slow as you start to navigate that retracement, you've came too deep to target anything
Past
other
it.
than the previous high.
I would agree.
And so a 2-day pullback like this, I think for me, target number one, yeah, you got concern at 92, but I don't think it's a targeting concern. It's like, all right, it's a fly on your ear type thing.
Exactly. I would 100% agree with that.
All right. Yeah. So both you and I like Picard with a little bit of an industrial kicker here. What do you got for us next?
All right. We got to look at NLSN. I got to get your take here on Nielsen. Nielsen. I don't know how you say it. I say Nielsen.
Listen, we've had this debate, Frankie. It is Nielsen.
To me, it'll always be Nielsen, right?
Nielsen.
Unless you tell
Listen,
me, unless your last name is Nelson and you say it's Nelson, then I will refer to it as Nelson.
my
I
my mother's maiden name is Nielsen, and I can promise you that family spells that last name 3 different ways,
It sounds
and
the
they
same
and
to
they
me no matter
pronounce it
what.
14 different ways. However you want to say it, you're good, bro.
Yeah, there you go. There you go. Well, more importantly than how you say their name, what do you think about these guys? So we had this double, even triple bottom that formed on these guys throughout the last couple of months, right? Big
Hmm.
fire candle on earnings. I don't know what the numbers were, but obviously the market liked them. Big fire back up, flagged back into the nine. I initially had these guys as a flag into the nine. Now we've got some upward confirmation. So that trade's going for better or worse. And for us now, it would just be the breakout itself, right? And I like the reversal characteristics. I like the risk to reward too
Well,
that these guys have to offer.
what if I were to tell you that Nielsen was able to pull off the hat trick here, bro,
It wouldn't hurt.
on their earnings report?
It wouldn't make me like it less.
You're coming from a low point, right? The bar is set a little bit lower from an earnings perspective. Nielsen came out, they reported a strong EPS number of 42 cents against 34. They came out, they reported a fairly decent revenue number at 882 million versus 870, and they also raised guidance. And so you had that positive catalyst coming that really was what propelled this reversal to even begin with. And now you're looking at exactly what we talked about today when we were talking through all those different earnings reports, secondary patterns, secondary patterns. This is what a secondary pattern looks like. It might not be the purest technically, but I like the resistance channel. I like the momentum that it's building. And I think you got to call it confirmation here today. I know we're only a couple ticks above that previous resistance level, but you are looking at a little bit of a no sell day. And even on an intraday level, you look at that 2135 handle, that's a pretty easy trigger above that. I like this reversal potential here
Yeah, I mean, I
on
can't
the
really
backs of some good earnings.
on the back of good earnings, a lot of upside, a lot of ways that we could play this. Just the trader
Well,
in you, right? Or you can build out, you could scale into a situation like this. Lots of ways that you can go into a reversal like this, I think.
and you know what, Frankie? You look at a chart like this, and stocks, they have personalities, and personalities take upon the traders that trade the stock.
Yep.
And you're seeing a stock that loves Mark's girlfriend, that just loves that 9 EMA so much. He wants to hug it on the downside, wants to kiss it on the top side.
Yep.
And until that changes, we're not going to change with it. Nielsen looks like a strong breakout here.
Yeah, I agree. I agree. Very interested in that one. All right, let's talk reversal. Since we're talking reversals, let's talk the reversal on 3M. I know you and I looked at this one last week when we were in the scan report meeting, but they had earnings, or maybe it was 2 weeks ago. I can't remember exactly, but really very recently we talked about this, these guys reversing and showing some good signs of life. And then we had someone, probably Tim, yelled earnings at us. That's gone now. Got that behind us, right?
Yeah.
Not and certainly wasn't maybe the greatest report ever, but that's what kept this opportunity here for us. Really clean reversal. It has been pinching until today at that 50-day moving average, did breach above it, but ran right into that old wick. So now we have two confirmation points on the wick on the 20, was that the 26? Yeah, 26, and today as well.
The wickety wick stuff, Frankie. Let's get that. Let's clear that wick up real quick.
I like that idea.
Okay, this is all earnings nonsense. Wickety wick, 183.80, bro.
I like it. I'm good with that.
183, like 83.
I am good with that. That
Yeah.
lines up right with today's high, which I really like that just as an entry technique when you're dealing with breaking above or below moving averages. I do believe, much like Mark, that the close is the close is the close, right? Sticking your nose is whatever. But if I get my nose stuck above that moving average, like I did today, taking out, and now I know that's resistance. That would be a 1-2 punch from a bull signal point of view to me. If we can take out that 183.82, which I'll just say 184 to make it easier on all of us. If we can take out that resistance level, we're also, in my opinion, getting confirmation of the break of the 50-day moving average. We, of course, have higher pivot lows already set up for us. It will be reversal. So on the one hand, that's very exciting because there's lots of upside. And we have a whole quarter, right? I mean, I'm not saying that this would be a quarter long trade, but we do have it if need be. But we do have a little bit of an alligator mouth on that 200 and that 50 period moving average. So we do have some room to work to the upside, I would say, into that 190, 191 range going forward. There will be, again, with reversals, there's lots of things that are, there's an hourly moving average or a weekly moving average.
There's always something
we'll have to navigate,
yeah.
And that's just part of the deal with reversals, right? You make up for that with the upside, because that's just the first real challenge that I see in that 190 range. It was not even 3 months ago that these guys were at 204, right? And so, not to say that they're getting there, but they clearly can get there.
Well, and they may, but I do think, based on the analysis, I do like it above the resistance channel going into 190.
Yeah.
I mean, that's kind of that alligator type environment you talk about. It clears up a little bit. I like the cleanliness of this reversal. We talked about it last week as well. It had increasing momentum, then slowing momentum, and then you formed a head and shoulders reversal pattern. The 50-day moving average caught up to it, and now you're looking at a potential breakout. It stood out to me in scanning today.
It's very nice, and I was monitoring it this last couple of weeks because I like the reversals, but Tim was there saying earnings, and laughing at me all along the way. All right, a couple more.
Okay, here. Two more.
Okay, number one, can I go bearish on Twitter? TWTR. Can I play this breakdown post earnings?
They drive it to 50.
Big drop down. Consolidate base all week long, right? Well, buyers have had a whole week plus to come in and say this is a sweet price, and other than maybe some intraday algos at the bottom, we're not really seeing it.
And an entire market that wants to buy
in a very bullish environment.
So comms can't get its act together, quite frankly, and it might get upgraded just from a technical price action perspective. But again, you're still working through some choppy nastiness there.
Yeah, you're still in neutrality at best, right? You're still not getting.
And even with Facebook recovering a little bit off that recent, price action underneath the 200-day moving average, what's Twitter done?
Yeah,
nothing. Literally nothing.
Impressive. Nothing impressive.
And so I see this as a pretty simple scenario. Earnings was a nasty earnings report. It was a gap down, sell down. Market had it right. Low base, let the 90 EMA catch up to it, trigger underneath the low, drive it to the next support level, and that's $50.
So yeah, I'm with you. I wanted to make sure and
it's Twitter.
It's Twitter. I own one. I own one. Right?
You do. You're the one that you live in Twitter, so you do. You can do whatever you need, bro.
So I appreciate it. Okay, well, one unofficial chart just to keep an eye on going into next week is Berkshire, BRK/B. They're the weird guys that do earnings on like tonight or Saturday. Right?
Yeah, they release.
And so they will not be, in a report or anything along those lines, but they are, much like the rut, much like the industrial sector, and so many things are challenging a major resistance level after a long-term consolidation range. Very interested in seeing what we look like post earnings, and certainly interested in beyond that breakout point, whether a trade, I mean, so much depends, right? It could gap down and we don't have to worry about it for another month at least. It could gap up to 300 and be like, well, you missed it. But I think it's worth keeping an eye on with where it is technically.
I agree. It technically you're kissing up against resistance. A couple weeks of consolidation. The build has been fairly consistent over the last 3-4 weeks. Now you just got to navigate earnings, and I don't expect fireworks out of Berkshire, but I do expect a lot of commentary out of Berkshire. And these are obviously these can be market moving type reports. I mean, when the Oracle speaks, we typically want to listen.
We
And so,
usually do.
yeah, and so I always like just diving into the commentary because I I I think you can get a lot of insights not just about this company but about what this company is representing to the market. And so I'm sure I'll have some thoughts in Discord over the weekend on Berkshire's report, and then obviously we'll talk about it here in the halftime report. But I do agree, Frankie, from a technical perspective, earnings has been a catalyst for so many stocks in the last 3-4 weeks. Can Berkshire meet the test and exceed the test coming through this weekend? It's an open question, but one I'm fascinated in answering over the course of the next couple of days.
So yeah, I'm very excited to see what that chart looks like on Monday morning, because it could be something that's like, oh wow, or something that's like, oh darn, or something like that's why you don't buy ahead of earnings. I mean, it go a lot of ways, right? But I
Mm-hmm.
love when we're in that scenario. Last one, since there's one left to go, another one that might be a week away, and that's Aflac, AFL. Uh, Again, much like Berkshire, they are approaching the top of a range. They're going to be a little overextended going into it. That is the all-time high. They set that thing back in 19, and they've been using that high for the last year. Going to be running a little hot. Probably need a little consolidation post breakout, but that's probably what happens, right? I mean, you might fire right through it, but it's had a hard time breaking through that resistance. I'm going to like the break, whether the trade itself, I don't know, right? If it breaks on Monday morning, I probably don't like it as much as if it breaks on Thursday afternoon, right? Just
Yeah,
because
you'll like a little
let it let
consolidation.
it
Yeah,
let it cool
pretty
off,
standard.
let some profit taking come in. But we've got the cup and handle forming right now within the longer term consolidation within the longer term all-time high. I've got a target of these guys at 64 if we can break. That's not, in my opinion, a particularly aggressive target either. So maybe a week away, and probably ideally a week away. Hopefully, I'm bringing it back up next week and saying now we're ready for it. But I do think it's very much watch list worthy with the way it's
I think
developed
you
over the
put it
last
on
little
the
while.
radar, and you've actually seen some fairly decent price movements in some insurance companies. Others not so much, but
Well, there's
for the
not so
most
much.
part, earnings has been fairly decent for this space. And Aflac here, we're looking at a little bit of a breakout of 57 and a half. Yeah, I don't want to say you're overextended, but you are 4 or 5 days following a bounce somewhere near the 200-day moving average. So a little consolidation would not hurt anybody here. Frank, thank you so much for another edition of Frank's Charts. You are fantastic, and we
Thank
really appreciate everything you bring to our community, from onboarding on Mondays to handling the onboarding consultations to being here every Friday to also doing the Tackle Trading Twitter account. And if you have not checked out Tackle Trading's Twitter account, Frank puts out a lot of charts throughout the week, a lot of commentary, but for the most part, I love that Frank's charts you put out there, a little short video on the chart of the day every Thursday. Check out Frank's charts on Tackle Trading's Twitter account. With that said, Frank, thank you so much. Last
it.
words to you, my friend.
Hey, as a pleasure as always. Always love coming in, hanging out, talking, trading with the team. So thank you, team, for having me. We're coming out of earnings. There are still going to be some stragglers, so make sure you are double checking that. You got Disney and PayPal and amongst some of the bigger names next week, but we're about through it as we're moving into this final quarter. So far, signs of the Christmas rally are very, very strong. Make sure you're position size appropriately, right? Don't get out of hand or anything like that. And I say that to myself as well. Sometimes we all need to remember that, but be following those rules, right? And how far will this run go? None of us here know. Not me, not Matt, not anybody else. It doesn't make us bad people. It just means we don't know the future. But while we've got this momentum, why don't we look to take advantage?
I agree there, Frankie. And you and I are going to go get into the scatter report meeting for tackle trading, where we dial in our scatter reports for the stock, options, and commodity market and prepare the tackle trading newsletter for our pro member community. So if you want to check out those reports, you can go over there to tackletrading.com. You can get a 15-day free trial, and you can check out the reports this week as we go through our watch list candidates from a technical perspective in the stock and the options report. And make sure to check out the new rapid fire video along with all of our other commentary, including the rankings for tackle trading in the sectors in the tackle trading newsletter. All of that happens tomorrow. We dial it in for the rest of the day here today as coaches. So definitely for the pro members out there, check out the stock, the options, and the commodity report, the tackle trading newsletter. And as always, we'll have our Discord link for the pro member community in all of our reports. And I'm sure there'll be some conversations happening in Discord throughout the weekend as well. Between now and Monday, though, we will, everybody in tackle trading community, you guys have an absolutely amazing weekend. Hopefully the market's treating you well. Hopefully we have another good trading week next week as well. Check out the scatter reports. We'll be back with you on Monday in the halftime report. Same time, same channel.